Thursday, June 13th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about the age of paper that we've been under for the last almost 50 years, and I'll explain what that means after I have a look at the market. I want to look at an article as well on Zero Hedge. It says Paul Tudor Jones reveals his favorite trade for the next 2 years. That looks interesting to me. And yeah, let's have a quick look at what the markets are doing. It's 7:37 a.m. London time. Yesterday, the stock markets continued to drift lower, even though they weren't big losses like the previous day, but they didn't have any strength on the upside. The Dow finished down about 43 points, just around 26,000. S&P finished down 6 points at 28.79, and NASDAQ finished down 1/3%. So right now we've got spot gold at $13.36, up $2.50. Range overnight has been $13.32 to $13.38. Silver's up 5 cents or 1/3% at $14.82. Range has been $14.73 to $14.85. The Dow is down 25 points. Dow futures just I guess below 26,000 here, 25,977. We've got S&P down a couple of points. NASDAQ 100 future down about 12 points. So the markets are not really showing too much signs of stress, but they're not really going anywhere. They're drifting lower, if anything. Looks like the momentum in the stock market is kind of keeling over, I would say, but we still got 2 days left for this week, and we'll see what happens. The currencies, we saw the pound drop late yesterday, about 1/4%. I think there was a vote in Parliament that decided that Parliament cannot make a no-deal Brexit illegal. So that's why, you know, that's increased the chances of there being a no-deal Brexit, that by October 31st, if there is no deal, the UK could leave without a deal. So yeah, we're at 126.85 right now. Cable down a few pips. So not much change from late yesterday, but I think earlier in the day and the day before, we've traded comfortably above 127. So now we're below 127. Euro is just below 113, 112.96, up about 8 pips or 0.08%. Dollar is down about 0.13% against the yen, 108.35, and pretty much unchanged against the Chinese currency, against the yuan, just below 693. Crude oil is rebounding, has rebounded quite strongly overnight. We had gone to a 50 handle yesterday, I think, in WTI. Right now we're at 53.20, up almost $2, and almost up 3 2/4%. Sorry, and up 3.6%. Brent is up $2.50, up 4% at 62. Bond markets, they're not really showing any signs that the economy, you know, that investors think the economy is going to do well. The curve is still heavily inverted. We are about 10 basis points inverted between the 3-month T-bill yield and the 10-year yield. Right now, 10-year yield is still relatively low compared to the last few months. We're near the lows, of course. We're at 212, and the 3-month is at 222. Down slightly this morning, the yield, about 1 basis point. So the age of paper, what does that mean? Well, I listened to a video on World Alternative Media. Josh Sigurdson, I think his name is. He's an interesting channel. I like that channel. And he was interviewing Robert Kiyosaki. And Robert Kiyosaki mentioned something about 1,500-year cycles. And he said 1,500 years ago, the Roman Empire fell, which is around 476 AD, right? And then he said, well, 1,500 years before that, it was the Bronze Age. He thinks we're due for a collapse because it's been 1,500 years since the fall of the Roman Empire. So then I thought, well, we will fall in the age of paper. Well, the age of paper, of course, is a monetary reference that I'm making to ever since we've been on a paper standard, or the petrodollar standard, since August 15th, 1971, when President Nixon temporarily suspended the convertibility of the Federal Reserve notes, or the dollar, or the United States dollar, if you want to call it, into gold. So it's been, well, it's going to be 50 years in a couple of years that this happened. The problem with having a paper, how can I say, standard, is that the United States, being the acting as the reserve, having the reserve currency, the United States needs to keep producing, exporting deficits. Yeah, that sounds a bit weird. Exporting debt, which comes out of deficits, trade deficits. Other countries around the world, they need to try to sell as much as they can to the United States, because they need to have dollar reserves, paper reserves, so they can deal with other countries. There is no alternative. The IMF doesn't allow other reserves, you see, and the US has a veto at the IMF. You know, if you try to do, start, trading in other currencies or using gold, it's very difficult. But now I think the age of paper might be coming to an end. And why do I say that? Well, we are told that there is a trade war, a lot of dispute between the US and China, and now, US and Mexico, even Europe. I think Trump tweeted, or I think it was yesterday, something about Nord Stream 2, that he would put sanctions. He's using the trade, this Nord Stream 2 as a tool for trade with Europe. So maybe this is just like something for public consumption, because the biggest beneficiary of balanced trade, I would say, a system where trade is balanced, you would need a neutral currency to be used, because if everyone is running fairly balanced trade, the only way to do that is through a gold standard, where people actually extinguish debts. They pay their bills. Under a paper standard, a fiat currency standard that we've had, governments keep running domestic deficits. They keep spending. They keep devaluing their currency. Everyone's trying to devalue so they can export more. And not that this works, because in the 50s and 60s, the Deutschmark was one of the best currencies, and Germany did very well exporting. But I think the biggest beneficiary of the end of this period, some people call it a non-system that we've had, this petrodollar system, will be gold, because gold is the only form of money that has a track record, thousands of years, silver as well. But I think gold is going to benefit, because it will be used as the accounting money between countries to trade. There's no problem with having to accumulate another country's currency. It's not political. Gold cannot impose sanctions. And I think that's what's happening. And I think the end of paper is near. And yeah, that's my that's what I'm talking about here. The end of paper, the paper era. How will it be after this? I think it's going to be very disruptive for many people, because in the age of paper, you've had big government, you've had a big welfare state, you've had a big, how can I say, military industrial complex. A lot of people are going to be upset, I think, because the government is going to have to get a lot smaller. People are going to have to become much more self-reliant, which in my opinion is a good thing. But people have been spoiled, I think, a lot of people. So it's going to be disruptive. Doesn't have to be disruptive for you or me if we look after our, ourselves, our finances, our families. I don't think it's a problem. It will be disruptive, though. When it will happen, I think we're close to it, because these trade wars, they are, how can I say, culminating right now. So we'll have to see what happens in the next, I think, 6 to 12 months. I think we're getting close to some big change. So the article on Zero Hedge, to quickly go through it, Paul Tudor Jones reveals his favorite trade for the next 2 years. Paul Tudor Jones is a very famous hedge fund manager. He's been around for over 30 years. He's, if you say the name Paul Tudor Jones on Wall Street or in the city of London, everyone knows. So what's his favorite trade? Well, it's gold. He thinks that gold will do very well. And this is his reason, and I'll read from here. I'll put a link to this article below in the description. So what does he say? Remember, we've had 75 years of expanding globalization and trade, and we built a machine around that believe that's the way the world's going to be. Now, all of a sudden, it's stopped. So I think he's talking about, what Trump is doing, trying to balance things. And he continues, and we are reversing that. When you break something like that, the consequences won't be seen at first. It might be seen 1 year, 2 years, 3 years later. That would make one think that it's possible that we go into a recession. I agree with him. That would make one think that rates in the US go back toward the zero bound, and in the course of that situation, gold is going to scream. The price of gold is going to scream. Do I agree with the zero bound? I'm not too sure. I'm not too sure that the Fed might want to take rates to zero, but the market might say no, because if the world goes into a recession, the U.S. especially, how the government is going to have an even bigger budget deficit. It could be 10% of GDP. And would people want to lend money to the US at zero when they're running a 10% of GDP budget deficit? So this could be a reason for gold to go up, the price of gold. But I think it's more to do with, the bigger picture is what I was talking about, that gold will have to re-emerge as the anchor behind the world monetary system. If we're breaking this dollar-based system where other countries depend on, have to accumulate dollar reserves and are at the mercy of the US government using the dollar as a weapon, that's why I think, gold will reemerge. His reasons are interesting. We've seen gold go up recently because of, rates have come down. But gold could go up as well when rates are going up. Don't forget, when the Fed started hiking rates in December 2015, gold was below 1,100. It was 1,045. It bottomed on the day that the Fed raised rates for the first time in many years. And, since then, the Fed has been raising rates, and we are above 1,300. So it doesn't mean that gold will go down if actually rates don't go to zero. But I thought that was an interesting article. I recommend you read it, and I think there's an interview as well that he does talking about it. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.